Welcome. Today we're diving into a pivotal moment for Apple, Google, and the entire tech industry. Today we're breaking down a major court decision that just impacted Apple stock. This ruling has sent shockwaves through Silicon Valley and Wall Street alike, with investors and tech watchers scrambling to understand what it means for the future of these tech giants. On September 4, 2025, a federal judge ruled on the government's monopoly case against Google, a case that put billions of Apple's revenue at risk. The courtroom was packed, and the stakes couldn't have been higher for both companies. The outcome? The judge found Google acted like a monopoly, but the penalty was far lighter than expected. Many experts had predicted a much harsher ruling, possibly forcing Google to change its business model entirely. Most importantly for Apple investors, Google can keep paying Apple billions to remain the default search engine on iPhones and Macs. This partnership is one of the most lucrative in the tech world, and its continuation is a huge relief for both companies. This deal is a huge source of profit for Apple, and the court's decision means that cash flow is safe, at least for now. It's a financial lifeline that supports Apple's bottom line and helps fund innovation across its product lineup. That's why Apple's stock jumped nearly 4% after the news. Investors responded instantly, seeing the decision as a green light for continued growth and stability. The government wanted to break up Google's power, especially its exclusive deal with Apple. Regulators argued that this partnership stifled competition and limited consumer choice in the search market. If the court had sided with the government, Apple could have lost billions overnight, a major blow to profits and stock price. The ripple effects would have been felt across the entire tech sector, shaking investor confidence. Instead, the judge allowed the current deal to continue, though future exclusive deals are banned. This means Apple and Google can keep working together, but with more scrutiny going forward. For Apple shareholders, this is like dodging a hurricane. The immediate danger has passed. The company avoided a worst-case scenario, and the market breathed easier. The company's business model remains stable, and a key revenue stream is protected. Apple can continue to invest in new products and services without worrying about a sudden loss of income. Wall Street breathed a sigh of relief, and so did Apple investors. The decision reassured everyone that Apple's financial foundation remains strong. The bottom line? Apple's profits are safe, and the company has room to plan its next move. With this uncertainty behind them, Apple's leadership can focus on future growth and innovation. Let's look at why this deal matters so much, and what it could mean for the future of both Apple and the tech industry as a whole. What exactly is this Apple-Google deal, and how did it become one of the most talked about partnerships in the tech world? Why is it so valuable, and what makes it so unique in the landscape of business agreements between tech giants? For years, Google has paid Apple over $20 billion annually to be the default search engine on all Apple devices, a staggering sum that keeps growing. Every time you search on a new iPhone, it's Google by default. No setup required, no extra steps. It's seamless, and most users never even think about it. This gives Google access to hundreds of millions of premium users worldwide, many of whom are among the most valuable consumers in the digital economy. That's why Google is willing to pay so much. For Google, it's an investment. More searches mean more ad revenue, especially from Apple's affluent customer base. Each search is a potential click, a potential ad view, and ultimately, more profit. For Apple, it's nearly pure profit. No product to build, just a setting in their software. They simply allow Google to be the default, and the money rolls in. This deal is one of the tech industry's biggest secrets and a cornerstone of Apple's financial success, quietly adding billions to their bottom line every year. Google pays rent for the best digital real estate in the world, Apple's devices, which are in the hands of some of the most loyal and high-spending customers. Apple's ecosystem is so powerful that companies are willing to pay a fortune just to reach its users. The influence Apple holds over its user base is unmatched. The deal has grown from a few billion to over $20 billion, showing Apple's leverage and the increasing importance of digital access. Apple doesn't have to run a search engine or manage ads. They just collect the check year after year with almost no extra effort. For Google, it's the cost of staying on top in search, especially against Microsoft's Bing and other competitors who would love to take their place. This partnership is a win-win, but it's especially sweet for Apple investors, who benefit from this steady, high-margin revenue stream. The deal highlights the immense value of Apple's brand and user base, showing just how much other companies are willing to pay for access. It's a testament to the empire Apple has built around the iPhone and how its influence extends far beyond just selling devices. Now let's see why this money is pure gold for investors and how it shapes the future of both companies. Why is this $20 billion so critical for Apple and its investors? To understand its true value, you have to look beyond the headline number and see what it means for Apple's business model and long-term stability. Unlike selling iPhones, which involves manufacturing and marketing costs, the Google payment is almost pure profit. Apple doesn't have to build new factories or spend billions on advertising to earn this money. It simply arrives year after year with minimal effort. It's a high-margin revenue stream, exactly what investors love. These kinds of deals are rare, and they make Apple's financials shine even brighter. This single deal accounts for over 15% of Apple's total operating profit. That's a huge chunk, especially for a company of Apple's size. Losing it would have meant a sudden, massive drop in profitability and a likely stock crash. Investors would have been forced to rethink Apple's future. The court's decision lets Apple keep this pot of gold. It's not just a win in court, it's a win for every shareholder. This steady cash flow funds research, stock buybacks, and dividends. It gives Apple the freedom to innovate and reward its investors. It's a financial cushion that supports Apple's value, especially as growth slows elsewhere. In uncertain times, this kind of reliable income is priceless. Investors value Apple for its reliable profits, and this deal is a big reason why. It's a pillar of stability in a sometimes unpredictable market. The Google money is a predictable engine in a volatile tech world. It keeps Apple's financial machine running smoothly, no matter what's happening around it. By removing the risk of losing this income, the court's ruling makes Apple a safer, more attractive investment. It reassures both big institutions and everyday investors. It solidifies Apple's financial foundation and boosts investor confidence. That's the kind of security that keeps people coming back to Apple stock. That's why the stock soared on the news. Investors recognized just how important this revenue stream is to Apple's future. But the tech landscape is changing fast. Let's talk about AI. Why did the judge let this deal stand? The answer: artificial intelligence. The court recognized that search is evolving rapidly, thanks to AI chatbots and new competitors like OpenAI's ChatGPT. Instead of just links, users now get direct answers from AI, changing how we find information. The judge cited OpenAI's $500 billion valuation as proof that Google's dominance is already under threat. With AI transforming search, the court saw less need for harsh penalties. This is a turning point, a major legal decision shaped by the rise of generative AI. The future of search may not involve Google at all. AI assistants could take over. For Apple and Google, this is both a reprieve and a warning. Their deal is safe for now, but the world that made it so valuable is changing fast. Both companies must adapt, or risk being left behind. The focus on AI highlights Apple's biggest challenge. It's falling behind in the AI race. Google, Microsoft, and OpenAI are leading, while Apple is playing catch-up. Apple's strength has always been perfecting existing tech, but generative AI requires new skills and massive data. Reports say Apple is struggling to develop competitive AI tools and losing top talent. The next wave of devices will be defined by intelligence, smarter assistants, more helpful features. If Siri lags behind, the iPhone could lose its edge. The legal win gives Apple time and cash, but the pressure is on to catch up in AI. Rumors swirl about a new Apple search engine or a revamped Siri. Apple's future depends on how it responds to this challenge. Let's look at the numbers behind Apple's current situation. Despite the legal win, Apple's business growth has stalled. Over the last 3 years, revenue grew just 3.6%, total, not per year. The iPhone market is saturated, and new products haven't matched its explosive growth. This slowdown is a real concern for investors. Stock prices depend on future growth, and Apple is searching for its next big thing. The Vision Pro headset is promising but niche. In this context, the $20 billion from Google is even more important. It props up profits and masks slow growth. Protecting that income was crucial, but it's not a long-term solution. Apple still needs a new growth engine. The Google deal buys time, but the clock is ticking. Investors must recognize this is support, not a fix. Apple's next move is critical. To understand Apple's position, compare it to Alphabet, Google's parent. While Apple's revenue barely grew, Alphabet's jumped 32% over 3 years, thanks to AI. Alphabet's deep AI investments power its search, cloud, and self-driving projects. Apple, focused on hardware, is lagging in AI-driven growth. Here's the twist. Apple's stock is much more expensive, trading at a PE ratio of 36 versus Alphabet's 25. Investors pay a premium for Apple's stability, brand, and loyal customers. Alphabet is seen as riskier, tied to advertising and AI competition. The question, is Apple's safety worth the high price, or is Alphabet's faster growth the better bet? As an investor, you must weigh stability against potential. The market is watching closely. The next chapter will be defined by who leads in AI. Apple's lag in AI is its biggest risk. ChatGPT and other generative AI tools caught Apple off guard. Google and Microsoft quickly integrated AI while Siri feels outdated. Apple's privacy focus limits data collection, making AI development harder. Top AI talent is flocking to rivals, not Apple. Apple must balance speed with its reputation for polished products. The pressure is on for a breakthrough. Maybe a new Apple GPT or a smarter Siri. Apple's massive valuation depends on staying ahead in tech. If it fails to deliver in AI, its dominance could slip. The next product launch must showcase real AI innovation. Let's sum it up. Apple's legal win secures a vital profit stream and stabilizes the stock. If you own Apple shares, you can breathe easier, at least for now. But don't get complacent. Growth is slow and Apple is behind in AI. The company's high stock price reflects its brand and stability, not its growth. As an investor, you must decide if that premium is justified. Apple has time and money to catch up, but the next 12-18 months are critical. Will Apple lead in AI, or will competitors redefine the future? Watch closely. Your investment depends on what Apple does next. Be smart, stay informed, and be ready to act. The story isn't over. The next chapter starts now.